Welcome traders to a really important session on the new ESMA regulation, Professional Retail Trader Categorization. Before we go into the topic, as always, let's have a look at the risk disclaimer. Risk warning: Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you're prepared to lose. Before deciding to trade, please ensure you understand the risks involved and take into account your level of experience. Seek independent advice if necessary. The topic today is probably a little bit different from the other sessions that we've covered so far on indicators or trading strategies. Today we will talk about a change in regulation which has an impact, quite significant impact, on a lot of traders' trading activities. And you may have heard of what many people refer to as ESMA, ESMA. Let's start with, as always, demystifying what ESMA means, and then let's have a look at how the new rules that they will put into force can have an impact on your trading and how you can react to it. So first, what is ESMA? It's the European Securities and Markets Authority. And as I point out, it's an independent EU authority, and basically it has a couple of very important goals. When you look at their mission and objectives, they say they will enhance investor protection and promote stable and orderly financial markets, something we're probably all interested in. So what does that have to do with CFD trading? In CFD trading, they looked long and hard and how they can make it better for all sorts of traders, retail traders, professional traders. And they came up with a set of rules which will be implemented quite soon already, by the 1st of August 2018. The new rules have an impact on retail traders, in other words, like people who are less experienced, maybe newer to the markets, but also the more sophisticated or professional traders with lots of experience and maybe more capital in their trading accounts will be impacted by the ESMA rules. And you can find out if you qualify as a professional trader today. That's quite easy. Just use the Blackwell Global website or get in touch with your Blackwell Global account representative. We're very happy to help you with that. So let's have a look at the actual rules and how they will have an impact on your trading moving forward. So the main impact that you probably will see on your trading is that it will change the level of leverage, and I give you an understanding and an idea how leverage will be impacted. And over the next couple of slides, we'll also have a look at the definition of leverage, and I also share with you some examples. So the new minimum margin rates for Blackwell Global products will change depending on your trader categorization as either a retail trader or a professional trader. So from a leverage point of view, you will see changes on depending on the financial instruments you're trading. If you look at a major currency pair, these are ones that are denominated, for example, in euro or in US dollar, like the really popular ones, the leverage goes down to 30 to 1. If you enjoy trading indices like the German DAX or the UK FTSE or the S&P 500, that available leverage will go down from the current levels to a maximum of 20 to 1. When you look at the commodities, that leverage, oil is probably the best known one, that leverage will go to 10 to 1. And equities, the leverage is 5 to 1. So that is much lower leverage than you may be used to under the current arrangements. But again, we will have a look at what is the definition of a professional trader versus a retail trader, because I can already tell you professional traders will not be impacted by the changes in leverage. There are other factors that will change, but if you enjoy and want to keep enjoying a higher level of leverage, but it's quite advisable to see if you can qualify for professional trader status. And if you end up in the retail segment, It's not just bad news, it's just the parameters change, right? And maybe rightfully so. Basically, what it means for you is that your margin requirements go up. So let's put all this into context and have a look at what it actually means. When you think about leverage, leverage is nothing else than a percentage of your position or a portion that you have to, you have to provide a certain amount of money, which is the margin, and then the broker will match that and give you more money to open a trading position, which can be quite important. Think about euro US dollar, to make sure that these small incremental movements in euro US dollar actually translate into something that makes sense to trade for you. When the trading leverage needs to be at a sufficient level that you can take benefit of that movement up or down in something like euro US dollar. Other currencies have a similar situation. So without that leverage, the only other thing you can do is to get to the same level of position size at the end of the day, or to enjoy the same benefits from the movement. You would need to increase your position size, in other words, margin. That means you would basically need to have more money in your trading account to trade a similar size. So for example, if you want to trade a lot and you have a very high level of leverage, you only need a small amount of money from your trading account as margin. But if leverage goes down significantly, and which is exactly what the ESMA rules indicate, then you will need a lot of capital in your account to open a position like a lot, which is 100,000. So let's have a look at a trading portfolio with real stocks. Let's say you buy a stock in a German company, in an English company, in an American company. So the rights you get by owning a stock is you expect the price to go up. There's no legal right that would ensure that value goes up, but that's something you would expect. But the right you really get is probably twofold. One is you can go to the AGM if you desire to do that. And secondly, you can enjoy the dividend if it's being paid out. But for a day trader, that's not the most interesting aspect in trading, because you want to go quickly in and out of a position that could be in a couple of minutes, couple of days, maybe less than a week in most cases. And there you need an instrument like a CFD that allows you to quickly get into a trade and out of a trading position again, and also maximizes your efficiency by the use of leverage. It's when you buy a real stock, you have zero leverage. And crudely said, the higher the leverage, the more borrow funds are available through the broker to maximize the efficiency of your positions. Let's be clear, it can go in both directions. It can go in your favor and can also go against you. But that's how the leverage can make your trading position much more sufficient or efficient. However, without sufficient leverage, it will be very hard for you sometimes to enjoy, and we talked about euro, US dollar as an example, other currency pairs also apply, but also indices and oil and so forth. If you don't have sufficient leverage and you don't have enough money in your account, it will be really hard for you to enjoy a trading strategy which could, in theory, that's never guarantees, but which could enjoy, you could enjoy in theory, but it generates a high amount of profit for you. If you take the leverage out, you take out a lot of risk, which is also a good thing, which typically enables you to trade longer. However, the expected returns also go down, which is a big factor for a lot of traders when they think about the effectiveness of a trading strategy. So I've drawn you this very simple example with two leverage comparisons. So for example, if we say there's a financial instrument that you right now trade with Blackwell and they give you a 1 to 400 leverage, that means you give kind of €1 or $1 and Blackwell will match that with 400. That very quickly gives you a very large position size which you can trade. And then on the other side, when we have a 1 to 20 leverage, you can see the chart quite clearly. You will need a lot more capital to be able to move kind of the same amount of money. So the second the leverage goes completely away, that will have a profound impact on the performance of your trading strategy. So make sure you understand kind of how dependent you are on leverage. If you can ramp up the size of your trading account by the same factor, like 10, 20, 30, 40 times, which not a lot of people can, then you're probably not even affected by rules because you just increase the position of account in your the money in your account, which will in turn give you the ability to trade and handle larger position sizes. But most traders don't have that luxury, so they need to find a way to keep the higher level of leverage, and that's also something that we are discussing in this session. So one way, probably the main way to continue to enjoy um, a higher level of leverage is that you get a qualification as professional trader. Because professional clients will not be affected by these changes from a leverage point of view. The way they are affected is that certain protections are not available to them. Probably the most prominent one is negative balance protection, because there is an expectation that traders know how to use stops, for example, and know how to protect themselves to avoid kind of turning an account into a liability basically against the broker. So the big question everybody's asking right now is who is eligible to be a Blackwell Global professional client? What is the ESMA official definition of a professional client? They have laid out three factors and three categories, of which, and that's very important, a trader needs to meet two to qualify as a professional trader. Let's have a look at these three categories. Number one, they look at your trading history and they ask the simple question: has your trading averaged 10 significantly sized transactions per quarter over the last 4 quarters? So think about the trades where you traded, let's say a lot, really large positions. And you had sufficient number of round trips, at least 10 on average. So you could have like a very active quarter and then a quiet quarter and then a very active quarter again and a quiet. That would still qualify, right? If you meet that threshold, then kind of the first category is yours. Second, do you have financial instrument portfolio including cash deposits exceeding 500,000? So there you can kind of mix and have a look also in your different portfolios, kind of maybe even in your more passive portfolios, and see if you can exceed a number of 500,000 euros. And I know over the years I've talked to a lot of traders who have that amount of money. And if you look across a real stock portfolio, you look at something like CFDs and other portfolios. So a lot of traders actually exceed that threshold. That would give them a tick for the second box. And the third one, I suppose a lot of people will qualify that for that in one shape or form, is the question: have you worked in the financial sector in the professional position requiring knowledge of derivatives trading for at least a year? And we have a definition. I think that still needs to find its feet a little bit. What does that actually mean? Knowledge of derivatives trading. So in a way, we could also use the benefit of the situation right now, that is not 100% clear cut, and try to find a way to satisfy these criteria. So I'm not suggesting that you fudge it. Let me be very, very clear. I think what is laid out is clear enough. A, have you traded large position sizes? B, is your trading account or your investment, is that bigger than 500,000? And thirdly, do you hold a profession or have you held a professional position that requires you to have knowledge of derivatives trading? If you can say yes to 2 out of the 3, then you qualify as a professional trader. And everything I'm talking to you about leverage today is not relevant because the rules will not apply to you. What you can do to find out is you can go to the Blackwell website and you can kind of fill in a form with your information. You should tick the boxes and state where you believe you will qualify for one of the three categories. Again, let me repeat that. First one is around averaging more than 10 significantly sized transactions per quarter over the last 4 quarters. Second, do you have financial instrument portfolio including cash deposits exceeding 500,000? And thirdly, have you worked in the financial sector in a professional position requiring knowledge of derivatives trading for at least a year? And I think I've talked to a lot of traders, and I know for a fact that a lot of traders will meet these criteria. Again, if you have any questions or if you're in doubt, feel free to talk to your Blackwell global representative. I'm very happy to help you with that. So let's also have a look at the available protections for a moment. There are some protections that are exclusively reserved for retail traders, and when you think about it, it kind of makes sense. Because retail traders, there's the expectation that they are less experienced and hence, by default, need more protection to trade. Whereas on the other side, a professional trader who is a more sophisticated speculator should be allowed then to enjoy the higher levels of leverage. But then on the other side, they maybe shouldn't benefit from negative balance projection. I think and that's where the ESMA regulation is drawing a very clear line between professional traders and retail traders. And if you're a retail trader now, you could also think about how can I become a professional trader. If you're not there now, you could start increasing your position sizes. You could think about education and a profession that requires you to have knowledge of derivatives, kind of get closer to that. Or you could see if your overall trading account exceeds, or your invested capital exceeds 500,000. That would give you the possibility to access professional trader status and hence enjoy the higher levels of leverage. From a trading perspective, and I partly repeat what I explained earlier, if you are a retail trader, you will enjoy a lower level of leverage. That means that you will need a lot more capital in your account to make it work. However, from a protection point of view, you are in a great position because your account will enjoy negative balance protection, meaning that the balance on your account cannot go below zero, which is very important to a lot of retail traders. On the other side, professional traders don't have that benefit. So let's slowly come to an end of this session here. When I thought about what's the impact on your trading, that's probably something worth having a think about. First of all, you now need to think more carefully, depending on your classification. Do you have enough capital in your trading account? So maybe you need to stock up at trading capital if you are a retail trader, or you need to think about the reclassification as a professional trader, especially before August 1st, 2018, to make sure you're not impacted by the rules. In any case, I think it just reminds us in a very strong way that you need to use risk management and you need to honor your stop losses, right? Especially if you are a professional trader without negative balance protection, the fact that you have a stop loss in place will just become so much more important, because that's your only protection against kind of a situation like, think about Swiss National Bank when they announced that they stopped the peg between euro and Swiss franc. The kind of markets lost liquidity for a limited period of time and tanked quite quickly without a stop loss. That can be a really difficult situation for a trader without negative balance protection. And thirdly, you need to know how to use your leverage. And I made a couple of examples already. And you've seen the 1 to 400 versus 1 to 20 example. You also need to appreciate then on the other side that if you trade with oversized positions and you risk more than 5%, maybe even you go to 20, 30, 40% of your trading account in terms of risk for an individual trade, you will most likely not survive trading very long, because at some point you will just blow up as a trader. So in summary, I think it is important to take action now. So we started this presentation by talking about the difference between classification as a retail trader versus a professional trader. We laid out the ESMA regulation. We laid out the three characteristics. One being you need to have at least 10 sizable trades per quarter over the last 4 quarters on average. Second, you need to have across your financial portfolio, you need to be invested to an amount that is higher than 500,000. And thirdly, you need to have held a position, ideally in the financial service industry, which requires knowledge of derivatives trading or derivatives. And 2 out of these 3 categories give you the access to the professional trader status. Again, if you want to talk to Blackwell about any of these points, I would encourage you to reach out to them. They're always very willing, very competent, and very happy to help. With that, I'd say thank you very much for your attention. I wish you all the best in your trading and hope to see you as a professional trader soon again. Thank you very much and have a great day.